Hello, this is Mijun from Mijuslon University. October 27th, Big Jason Show starts. Welcome to Mijun, where we still uphold the fundamentals of United States stock investing. Midjunbam viewers, I hope you all had an enjoyable and fulfilling weekend. Last Friday, I wasn't able to bring you the Today's United States Stock News broadcast. So instead, I recorded a show with Chief Executive Officer Kim In-jung on Thursday evening. What's Credo Technologies' fair stock price? I shared a video titled like that, and this video is very useful. First of all, we studied in depth and detail how to measure the valuation of growth stocks, especially tech stocks that we love. In addition, a new feature has been added to Choice Stock this time, and this is something you should definitely take a look at. In my opinion, for investors participating in the United States stock market, this is an absolutely essential feature. If you go to the Choice Stock United States website and scroll down a bit, you'll see there's a new section here. When you're curious about a stock that suddenly went up, a new feature called Why Did This Stock Go Up has been added. Not only when a stock goes up, but also when the stock price drops by more than 5% or rises by more than 5%, this new service analyzes the reason and artificial intelligence summarizes it for you. Back in 2020, when I first started the Miji1 channel, the information that Korean investors had about stocks being invested in the United States was very limited compared to what investors in the United States had. That's why, even though I'm not perfect, I translate articles from American media, and just by delivering those translated contents to you in Korean, it was already very valuable. That's why the Miji1 channel gradually established itself as a channel that delivers news. However, recently, due to new artificial intelligence innovations, various stock-related news announced in the United States can now be easily accessed by you through news services that are emerging very quickly. So, as I've emphasized to you several times, there's the Miji1 YouTube channel and the paid membership that I run. What about this membership and the Miji1 YouTube channel? From now on, I'll focus on sharing my insights. That's why these days, unlike before when it took me about 20 or 30 minutes to post an article on the all-in-one membership, now it takes me almost an hour. I joked about it, but honestly I analyze things so deeply that it feels like I'm writing a thesis. So, for all kinds of market news, you can find various options provided by Choice Tech. You can instantly get the latest news by using various artificial intelligence services. The service I provide will focus solely on my personal opinions and insights. I hope you can keep this in mind. Alright, let's begin today's Big 2 news for October 27th. Before I read today's prepared articles to you, I'd like to share my personal opinion on a topic that one of our valued subscribers left for us today. If you look here, it was yesterday. A day ago, someone with the username Taeyeon left this comment. I'm glad I've finally become interested in United States stocks. But the exchange rate is so high that I face a big hurdle just at the currency exchange stage. Should I just go ahead, or should I wait for the exchange rate to drop a bit more? He left a comment saying, "Thank you for the video." Wasn't there a similar topic 3 weeks ago? If you look here, it says, if the price adjusts this time, I want to buy at a low price, but I'm worried because the exchange rate is too high. How should I consider the exchange rate when investing? This comment was left by someone using the identification JBCX7QN. Recently, as the exchange rate keeps rising like this, there are many investors who think, I'll invest when the exchange rate drops, so I'll wait until then. But personally, I think this kind of thinking could be a bit risky. Let me explain the reason for that. I think of the exchange rate as a contest of strength between two currencies. So we're comparing the United States dollar and the Korean won right now. The exchange rate, like any price, is determined by which currency has more demand and which has more supply. In the end, I think the value is determined by whether there's more demand for the dollar or for the won. So we need to think about whether there will be more demand for the dollar in the future, or if there will be more global demand for the Korean won. And there's another indicator that comes up here. There's a way we measure the value of money, and we call this the interest rate. If the interest rate is high, it means the value of that money is high. If the interest rate is low, it means the value of that money is low. That's how you can look at it. For example, Japan went through what is called the lost 30 years. These days, it's starting to show signs of recovery, but for a long time, Japan couldn't achieve economic growth and suffered from chronic deflation. Because of deflation, there was low growth. So the interest rate dropped all the way to zero, and they even had negative interest rates. Now, when you see negative interest rates or zero interest rates like this, it means the value of money was very low. Because the value of the Japanese yen was so low, Japan went through a long period of hardship. And if we analyze the reason for that, one of the biggest reasons was the decrease in the working age population. As Japan's birth rate declined, there weren't enough people to work. So, as an aging society arrived first, the economy was in a slump for a very long time. We need to remember this. Now, the reason is, as I mentioned a few weeks ago, in 2025, the Korean economy will face a major turning point. Korea's working age population has finally started to decline. The working age population, simply put, refers to those aged 18 and over up to 60 years old. This age group has, for the first time in history, shown negative growth. So at this point, what we need to focus on as our standard for judgment is this. When we look at the future of the United States and Korean economies, which one will show more growth and be more solid? If we anticipate that the exchange rate will move according to this, that's what we should focus on. But there's one variable. The era of artificial intelligence is coming, and as you all know, all the companies currently leading the artificial intelligence era are either in China or the United States. That's why, as time goes on, it's only rational to predict that the economic gap between the United States and Korea will inevitably grow larger. We shouldn't respond to this emotionally. As a Korean, it really pains me. But even so, if you think about the characteristics of artificial intelligence, as I mentioned, artificial intelligence has an amplifying function. This amplifying function means that even now, there is already a certain gap between the United States and Korean economies. That's why interest rates differ. The dollar's high value means high rates, while the Korean won's lower value leads to low rates. However, this value gap could grow even larger. Because as the era of artificial intelligence really begins, things like exchange rates could actually widen even more as time goes on. I have to share this rather unfortunate news with you. On top of that, there's another variable, and that's also negative. It's the emergence of stablecoins. Everyone, if you go to a South American country, it's said that over 50% of the population has already made payments using cryptocurrency. In South America, their currency's value has fallen sharply due to artificial intelligence. Compared to us, their interest in cryptocurrency and stablecoins is extremely high, and over 60% of cryptocurrency payments are already made with stablecoins. So the number of people using stablecoins around the world continues to increase. Stablecoins are usually tied to the dollar, right? So, as the number of people using stablecoins increases, the demand for the dollar is bound to rise. And when the demand for the dollar goes up, the exchange rate against the Korean won is also bound to rise. So when we look at the dollar chart now, many Koreans tend to think that if the dollar exchange rate goes up like this, it will eventually come down. The reason for that is because of the learning effect. We went through a really terrible experience, right? As you can see here, we went through the International Monetary Fund crisis, but what we remember after that is this. After the dollar rate skyrockets, it eventually drops. Because we have this kind of learned response since it went above 1,431 this time, people are expecting that it will eventually drop back down to 1,000 or 1,101. But it's really important for us to look at what the trend is like after that. Since 2015, the dollar's value has kept rising. The exchange rate has been consistently trending upward, and if you look at the 5-year chart, it becomes even clearer. Take a look at this. The exchange rate keeps trending upward, and honestly, I don't see any reason for this upward trend to suddenly reverse. That's why we should set aside our memories of the International Monetary Fund for a moment. I personally think it's important to remember that the current trend of the exchange rate is still upward. Alright, let's begin by reviewing the current United States stock market situation. Let's look at the S&P 500 map. I've changed the period to 1 week. And just by looking at it, you can clearly see that a very positive trend dominated over the past week. Especially the tech stocks and growth stocks we love performed really well. Among the mega tech companies, except for Tesla and Oracle, most of the stocks surged. They maintained a good trend. Everyone, I shared this kind of information with you in early October. Historically, the fourth quarter is when the United States stock market is at its strongest. October is especially good, and in particular, the latter half of October performs much better than the first half. And this year as well, we are seeing history repeat itself once again. So, even though the United States stock market was sluggish in early October, we could see that it gained significant momentum in the latter half. Especially last Friday, the United States stock market was very positive. The Dow Jones surged more than 1%, the S&P 500 was up 0.79%, and the Nasdaq also rose 1.15% in just one day. In addition, Bitcoin, which had been sluggish for a while, has risen further and is now at 114,700. I'd like to start by explaining why the prices of all assets are rallying across the board like this. And for your information, on Friday, all 3 major United States stock indices hit all-time highs. It's a very positive trend, so let's start by checking the fundamental reasons behind it. On the 25th, the United States stock market all hit record highs at the same time. We can sum it up by saying that the slower than expected rise in inflation has fueled investor sentiment, as it raised expectations that the Federal Reserve will continue its rate cut policy. The Dow Jones Industrial Average rose by as much as 472 points, closing at 47,207. It broke through the 47,000 mark for the first time in history. The S&P 500 climbed 0.79% to 6,791. The Nasdaq Composite Index rose by 1.15%, closing at 23,204.87. And all 3 indexes set new record closing highs. Now, the key driver of this rally was the September Consumer Price Index. It's called the Consumer Price Index. According to the United States Bureau of Labor Statistics, the Consumer Price Index rose 0.3% from the previous month and 3% from a year earlier. Market expectations were 0.4% and 3.1% respectively. So it actually showed that inflation is being contained more than the market expected. And the Core Consumer Price Index, which excludes the highly volatile food and energy sectors, was also up 0.2% month-on-month and 3.0% year-on-year, both lower than the forecasts of 0.3% and 3.1%. Now, the reason why it's important for inflation to be contained like this is because the Federal Reserve can only lower interest rates if inflation is under control. With milder than expected price increases confirmed, expectations for more Federal Reserve rate cuts have grown. What is the CMA FedWatch probability of a December rate cut? It was 91% before the announcement, then surged to 98.5% after. The Federal Open Market Committee, or Federal Open Market Committee, is scheduled for this week as well. There's a 95% chance that the interest rate will be cut further this week. To sum up, the Fed already started cutting rates at the last Federal Open Market Committee meeting, but they're expected to cut them again this week, and the probability of another cut in December is even surging to 98.5%. If interest rates keep dropping like this one after another, the chances of the United States economy falling into a recession become very low. And when interest rates fall, it's highly likely that market interest rates will also go down. I'll explain in detail a bit later why it's important for market interest rates to fall. Due to these expectations, financial stocks rose sharply. John Pierpont Morgan, Wells Fargo, and Citigroup all rose 2%. Goldman Sachs and Bank of America also rose together. Goldman Sachs and Goldman Sachs. Lindsay Rossner, who is the head of multi-asset bond management at Asset Management, appears. This expert says this: today, meaning Friday, Friday's consumer price index results did not provide any factors that would provoke the Fed. The Fed is already taking a dovish stance. So, it's important to maintain this stance right now, and there's no reason for this stance to change. Therefore, you can expect the Fed to continue maintaining a dovish stance. So at next week's meeting, which is actually this week, there is a high possibility of additional easing this week, and it is also highly likely that there will be a rate cut in December. Let me summarize it in one sentence as Miju Yun. On Friday, the United States stock market showed an overall upward trend. In particular, the performance of Miju Yun's top picks was also very impressive, except for one stock, Tesla, which recently announced disappointing bank earnings. All other stocks rose across the board. In particular, stocks like Coinbase, Advanced Micro Devices, and CoWeave showed a sharp upward trend, rising more than 7%. All right, just like this. Artificial intelligence beneficiary stocks, which dominate Miju Yun's portfolio, and cryptocurrency-related stocks were able to rise together for a reason. It's because of the inflation data, which turned out to be cooler and better than expected. What about the lower than expected consumer price index? It raised expectations in the market that the Fed could cut interest rates soon. Expectations have also increased for a sharp drop in the benchmark interest rate. What about the interest rate cut? For two reasons, this serves as the biggest positive factor for both tech stocks, which are classified as representative risk assets and cryptocurrencies. First, the tech stocks and growth stocks we love are assets that bet on future growth potential. What this means is when we invest in tech or growth stocks, we're betting on how much cash flow the company we're investing in will generate in the near future, 2 years, 3 years, or 5 years from now. But there's a problem. If interest rates are very high, the value of future cash flows keeps dropping. If the interest rate is zero, the value of future cash is the same as its present value. But if interest rates are very high, when you discount the expected future cash flows to their present value, that value drops significantly. That's because the discount rate increases. You can think of it like that. Therefore, a company's current value, or valuation, can rise significantly. So when interest rates drop, tech stock values rise. That's one way to look at it. Now, the second condition is when the economy is stable. So that's the condition here. When the base interest rate drops in a situation where the economy is not slowing down, market interest rates are also likely to fall. Loan rates, mortgage rates, and other market rates will go down as well. When that happens, more money will circulate in the market, increasing liquidity. Higher liquidity means more money flowing into stocks and cryptocurrencies. Therefore, you can see that stock and cryptocurrency prices are bound to go up. Now, there was a particular report that made the cryptocurrency market suddenly turn positive. A research report was released recently stating that after the leveraged liquidation that shook the industry, the structure has stabilized. According to this report issued by Coinbase, the leverage ratio had risen too much for a while, which was unhealthy. But recently there was a massive liquidation, and many investors lost money and pulled out. Now, as a result, the leverage ratio has actually dropped compared to before. What that means is, going forward, macroeconomic factors will drive more rational pricing of virtual and cryptocurrencies. That's how we can interpret it. So, you can see that the atmosphere in the virtual currency market has completely shifted toward a rebound. Now, this is something I always mention. When there are too many worries in the market and negative sentiment dominates, the possibility of a sharp drop in the stock market actually decreases. That's because there are additional funds coming in whenever the stock market drops even a little. If many investors have already sold stocks and are holding cash, even with falling prices, a sharp 10% or 20% drop is unlikely. When investor expectations are low, good news or major positive events like yesterday or Friday can quickly impact the market. the funds that had left the market can come back in, so the downward trend doesn't last long and the market can rise. That's how you should see it. Now, this time as well, this kind of logical approach proved to be effective. Because, as we all know, according to the American Association of Individual Investors survey results, there are still so many investors with negative sentiment. There are a lot of concerns about the market. That's why people say the market climbs a wall of worry. Now, if there is this much room for growth, that means there is a lot of cash sitting on the sidelines. So, if even a little bit of good news or a positive catalyst appears, it could provide the momentum for the United States stock market to rise again. So, you can see it as the United States stock market being able to hit an all-time high once again. All right, like this. Let's take a look at how various market sentiment indicators have developed as the United States stock market rallied on Thursday and Friday. First, let's look at the market breadth of the S&P 500. It's the market breadth and it's gotten really good again. Currently, 52.88% of the top 500 companies have stock prices above the 51-day moving average. And now, the number of stocks with a good long-term trend has also risen to 62.6%. So, the market breadth has now gone above average again, showing a very positive trend. That's how you should see it. Next is the volatility index. The volatility index has dropped all the way down to 16.37. So, the 201-day moving average is 19.34. Which is not only below 20, but also shows a significant gap from the average. So, in a way, you could say that today's market feels like this correction is already over. The market's volatility has eased significantly, and that's how you should see it. Next is the Fear and Greed Index. The Fear and Greed Index has also risen to 33. Of course, it's still in the fear stage for now, but the direction is important, right? If you look at the timeline, it jumped from 28 to 33 in one go. See, it's like this. The trend of hitting the bottom and going up is getting stronger. So even if you look at this, you might feel a bit disappointed thinking, is this correction already over? Now, the next item is the market score from Choice Talk, which has already reached the overbought level. It's now at 63. So this also shows us that the trend seems to have hit the bottom and is now going up. Now, of course, just because the trend has reversed like this, we can't guarantee that it will keep rising. Because I told you that if a catalyst appears, the direction can change at any time. And coincidentally, this week, there are still a lot of important catalysts left. So this week, we need to pay a little more attention to the United States stock market news. It's still too early to feel relieved. That's how you should see it. All right, so I thought I'd summarize the highlights of the United States stock market for this week since it's been a while. All right, let's start by looking at Tuesday first. It's October 28th, and one of the top picks from Mi-Jun will be announcing its earnings. Celestica will announce its earnings and more this time. We'll also host 2025 Investor Day and Analyst Day together, so it looks like there's a high chance that a lot of information will be provided. Now, next is Wednesday, and the earnings results on Wednesday are really significant. The first is Microsoft, the second is Alphabet, and the third is Meta reporting their earnings. Now, these three stocks, they're artificial intelligence beneficiaries, and in a way, their earnings give us valuable information to gauge their future. So right now, a lot of investors are focusing on how much money these companies are investing in artificial intelligence infrastructure. And there's something even more important on Wednesday, the day the Federal Open Market Committee meeting ends. So, at 2 post-meridium, the Federal Reserve is scheduled to announce its monetary policy. And then at 2:30 post-meridium, you can think of it as Jerome Powell's press conference still remaining after that. Earnings reports will continue on Thursday as well, and there are especially many of our top picks. The first is Coinbase, the second is Strategy, and the third is First Solar. Their earnings results are scheduled to be announced. In addition, although they are not our top picks, earnings results for Apple and Amazon, which can influence the overall market sentiment, are also scheduled to be announced. Now, especially on Thursday, investors around the world will be paying attention to Gyeongju, Korea, because the 2025 Asia-Pacific Economic Cooperation Summit will be opening there. Now, there's a particularly important meeting. Donald Trump will meet Xi Jinping. The two leaders are scheduled to hold trade negotiation talks. What kind of outcome will result from this is extremely important. Now, besides that, there are other major events that investors like us should pay attention to. One of the top picks that hasn't been supported is CoreWeave. Now, CoreWeave is working to acquire Core Scientific, and on Thursday, Core Scientific's shareholders will vote on the $9 billion acquisition proposal. Now, it's very important whether Core Scientific's shareholders will approve or reject this acquisition proposal. Actually, since the atmosphere is leaning toward rejection right now, the downside is somewhat limited. But if the deal goes through, there's a strong possibility that CoreWeave's stock price could rise significantly. Several other economic indicators are also scheduled for release. The European Central Bank is scheduled to announce its monetary policy, and in the United States, new unemployment claims and the preliminary gross domestic product figures for the third quarter are set to be released. Since there is a possibility that the announcements in the United States may not be made, it's something we should keep in mind. Another key indicator, the core personal consumption expenditures, is set to be released on Friday. We usually say that this is the inflation indicator most preferred by the Federal Reserve. August and July each saw a 2.9% year-over-year increase. So, what is the market's outlook for core personal consumption expenditures this time? It's up 0.2% from last month and 2.9% from last year. Now, whether the numbers match or come in lower than the market's expectations, or if they turn out to be much higher than expected, this will be a very important barometer. That's how you should look at it. And consumer spending also needs to remain healthy so that there's more confidence that the economy won't slow down. Currently, the market has a positive outlook, expecting spending to increase by 0.4% compared to the previous month. Among these, there are the top 4 events that are expected to have the biggest impact on the current state of the United States stock market. Of course, the most important part is the Federal Reserve's monetary policy announcement and Chairman Jerome Powell's press conference. It's scheduled for Wednesday, October 29th. Now, the reason why this is the most important is because of the following. The Federal Reserve's benchmark interest rate decision directly impacts asset prices, including stocks and bonds. This time, what's even more important than the interest rate decision is this. What matters most is what kind of attitude Jerome Powell shows at the press conference, what stance he takes, and what direction he suggests regarding the inflation outlook and future monetary policy. This is because the summary of economic projections, which has the dot plot, is only released 4 times a year, in March, June, September, and December. This time there won't be a dot plot. Therefore, the market's attention is focused on what Chairman Powell will say. That's how you should see it. The second important thing is this. It's also the core personal consumption expenditures, or core personal consumption expenditures, which is scheduled to be announced on Friday. That's how you should see it. Now, in the article above, it was introduced as the inflation indicator preferred by the Fed. This indicator is the data the Fed relies on the most when making policy decisions. That's how you should see it. What about Friday's inflation data release? You can see it as providing us with a crucial clue for predicting the Fed's next move. Next is the earnings announcement from big tech companies. This week, the earnings of key big tech companies that drive the United States stock market are especially concentrated. On Wednesday, Microsoft, Alphabet, and Meta will report their earnings. Apple and Amazon will announce earnings on Thursday. Now, these 5 companies carry huge weight in the S&P 500 and Nasdaq indexes. Therefore, their earnings and future guidance are extremely important. In particular, when it comes to future guidance, it's very important to pay close attention to how much demand there is for artificial intelligence cloud. So, what about their earnings announcements? It's safe to predict that not only tech stocks, but also the overall market sentiment and direction will be determined by this. Now, there's also a dark horse, which is the meeting between Trump and Xi Jinping that will take place at the Korea race. It's Thursday, August 30. This meeting could shape the direction of United States, China trade, and technology conflicts. It will likely directly impact the artificial intelligence semiconductor and cloud infrastructure supply chains we care about. If President Trump brings up high tariffs, energy policy, or emphasizes artificial intelligence semiconductors and artificial intelligence strategy again at this meeting, there is a possibility of short-term shocks for semiconductors and major artificial intelligence-related stocks. However, if the 2 leaders have a conversation with cooperative and conciliatory messages, then the trade conflict concerns will be somewhat eased. If that happens, the global appetite for risk assets will strengthen, and there is a strong possibility of a sharp rally centered on semiconductor export stocks. That's how I would summarize it. Now, among the United States support top picks today, there is some very important news about two stocks, so I'd like to explain this news to you as well. Now, I named it the United States Support Recommendation Content. There's some very welcome news that the Trump administration is now pushing to accelerate artificial intelligence power connectivity. Let's listen to what this is about. Bloomberg News documents show Chris Wright, the United States Secretary of Energy, is mentioned in the report. On Thursday, Secretary Lee urged the Federal Energy Regulatory Commission to approve a swift review of power grid connections. Now, the Federal Energy Regulatory Commission, or Federal Energy Regulatory Commission, from an investor's view, this regulatory commission is frustrating. It's keeping our preferred power stocks from performing better. That's the perspective you should have. Now, according to the draft rule that Minister Wright sent to this agency, the review will be limited to 60 days, and now we can expect a huge change in a process that could have taken years. What about speeding up approval for data center power grids? It will help President Trump realize his ambitions for artificial intelligence and expand the industry scale that he sees as essential for competition with China. So far, it has taken months or even years to expand the power grid like this. That means it used to take that long just to get approval. But now, since it's limited to 60 days, there's a much higher chance that approval will be granted within 60 days. All right, therefore, this will also be good news for so-called hyperscalers, who are eager to build new data centers that consume a lot of electricity. So, we can make this assumption. All right, Minister Light said this in a letter sent to the Federal Energy Regulatory Commission commissioners. To create a new era of prosperity in the United States, all citizens and industries need affordable, reliable, and secure electricity. To achieve this, large consumers, such as artificial intelligence data centers, supplied through the public power grid, must be able to connect to the transmission network quickly and fairly, he wrote. Now let me explain my personal opinion on what this article means. What about President Trump's recent action? It's a strong catalyst that will positively impact artificial intelligence-related power generation stocks like Bistra and Talon Energy. That's how I evaluate it. Now, what is one of the biggest bottlenecks in the current expansion of artificial intelligence data centers? It's not technology or capital. Technology advances and capital is plentiful. But the problem is that the approval process for connecting to the power grid to supply massive amounts of electricity takes too long. That's the main issue. So how is this process right now? It used to take several years, but the Trump administration pressured the Federal Energy Regulatory Commission to drastically shorten this process to 60 days. That's what happened. So therefore, this is what happened. So you could say this was an attempt to break down the biggest regulatory barrier that was blocking the physical expansion of the artificial intelligence industry. Now, especially for Talon Energy, which is one of our top picks in the United States, this measure could be a game changer. Well, as you may remember, Talon Energy they planned a key project to supply electricity from a Pennsylvania nuclear power plant directly to Amazon's data center. This was rejected by Federal Energy Regulatory Commission, right? So, is this project part of Talon Energy's strategy to attract data centers to struggling power plants? It was blocked due to this regulation. Now, what if this rule changes? Talon Energy will not only be able to resume the business that was previously blocked, but it's also expected that similar projects in the future can be pushed forward at a much faster pace. Now, Bistra stock is also likely to benefit significantly from this measure. Bistra ranks among the largest independent power producers in the United States. Therefore, the acceleration of power grid connections for data centers means that it can be interpreted that new large customers who will consume the electricity produced by Bistra can enter the market much faster than expected. Now, this can lead to an increase in the price of power assistance, and long-term power purchase agreements, which we call PPAs, can expand these opportunities. Therefore, it can be analyzed that this could lead to stable revenue growth for Bistra. Now, of course, the problem hasn't been completely solved. There was an analyst from Raymond James mentioned in the article above. This expert says the following: even if regulatory bottlenecks are resolved, physical supply chain bottlenecks for key equipment like transformers, gas turbines, and specialized chips still remain. Now, what that means is this: Even with a permit issued in 60 days, it will still take significant time before construction and power use can start. At this point, it's still just the administration urging. Therefore, whether Federal Energy Regulatory Commission ultimately gives approval is another matter. Also, keep in mind there's still uncertainty, like possible opposition from the state government. Now, but even so, in the short term, this news itself is likely to act as a strong factor in improving investor sentiment in the short term and is expected to strengthen the upward momentum of these two companies' stock prices. Now and in the long term, first, the core supply chain, including GPUs, will likely adjust its pace. GPU supply is necessary. Now, the biggest regulatory barrier to the essential artificial intelligence power supply may be removed. What about this point? It seems we can also say that the long-term growth prospects for Bisra and Talon Energy have become brighter going forward. Now, let's check the momentum of the two companies and wrap things up. First, Talon Energy. As you can see, the buy opinion is dominant. Out of 26 indicators, 5 indicate sell, 9 are neutral, and 12 indicate buy. The relative strength index hit the bottom and has now surged up to around 50. This is also very positive. Looking at Talon Energy's stock chart, it's clear the company has experienced a healthy correction within its long-term uptrend. That's the right perspective. This time, a key positive factor has emerged. It broke through the 50-day moving average, a key support, and surged. The 50-day moving average is $402, but the stock is already at $407. And also, the 200-day moving average continues to show an upward trend. So you can see that the structural trend is still upward. Now, there's another very positive aspect. When the stock price dropped like this, trading volume surged sharply, which is a very negative signal. But recently, after a period of quiet, trading volume has surged again. What that means is this. This time, the rebound isn't just a short-term technical bounce. In a way, it's a very reliable and positive trend. That's how we can sum it up. Now, next is Bisutura. Bisutura's trend has also turned to a buy signal. Of 26 indicators, 2 show sell, 9 are neutral, and 15 indicate buy. Bisutura's relative strength index indicator also dropped below a certain level for a while, but now it's trending back up above 50. Now, Bisutura is, in a way, in a box range. It goes up and hits resistance, goes up and hits resistance, and again goes up and hits resistance. Since it hit resistance 3 times like this, it couldn't help but record a downward trend. The good thing is that at the 180 level, it showed signs of recovery once, twice, and 3 times in a row. So this time, it looks like it will be the 4th attempt. There's a high chance it will easily go up to 220. And if it breaks through 220, after being blocked 3 times, breaking through is very positive. Now, during this period, energy has been accumulated. If it breaks through the 220 resistance line with this accumulated energy, there's a high chance the stock price will run up for a while. I think that's how we can wrap this up. The last content prepared for today is today's United States stock video. It's the first broadcast of the week, so I think it would be good to wrap up on a positive note. And to do that, there's nothing better than this person's videos. It's Topney. Now this time, Topney says the price of gold is at its peak. And he's presenting an optimistic outlook that cryptocurrency is finally ready to take off. Now let's hear directly from Topney about what grounds he has for his positive outlook that cryptocurrency will take off from now on. That's today's United States stock news for October 27th. As I mentioned earlier, there are a lot of major catalysts this week. Through Majuam Broadcasting, I hope you keep up with these major United States stock market events and continue to invest healthily and happily. Let's keep fighting together until we retire through United States stock investing. Have a happy day. Thank you.
This is Topney. This year, the S&P index has already risen by more than 15%, which is probably much higher than what was expected in the spring. Meanwhile, negative factors like the government shutdown and tariff issues have occurred. Why do you think investors now have more reason to be optimistic about risk assets and the overall market than they did 6 months ago?
As you know, even at the low point in April, I clearly stated that our year-end S&P target was 6,100 points. In other words, even then, we were expecting a strong market recovery. We've already surpassed that level, and with about 10 weeks left in the year, the S&P is at 6,800. In a typical year, the S&P would rise another 4% by year-end. If that happens, the index will surpass 7,000 points. I think this is the minimum standard. But the Fed started cutting rates in September and kept them on hold for most of this year. In the past 50 years, this pattern has only happened twice, in 1998 and 2024. Considering this, S&P believes that a recovery, which has weighed on the market all year, could lead to a simple rise of more than 4%. We might even see a 10% increase by year end. Wow, I understand.
Where do you think cryptocurrency stands in this trend? With ongoing issues like tariffs and global trade concerns, how should we interpret cryptocurrency price movements related to these factors?
Yes, cryptocurrency saw significant deleveraging on October 10th. This situation was partly caused by rising United States, China tariff, and trade tensions. This was the biggest cryptocurrency market liquidation in the last 5 years. So even now, the after effects are still troubling the market up to the most recent point in time. I think we've nearly cleared that hurdle. That's because the open interest indicators for Bitcoin and Ethereum are staying at record low levels, while technical indicators are actually turning positive. In this situation, I think there's a high chance that a cryptocurrency rally will occur by the end of the year. In addition, the recent announcement that John Pierpont Morgan is considering using cryptocurrencies as collateral is also providing significant support.
Yes, that's exactly what I wanted to hear Tom's thoughts on. We've had this conversation several times over the past months and years. In that case, Breton, it really reminds me of our conversation from early August. At that time, Tom said that cryptocurrency serves as a leading indicator for the direction of the stock market, and that it is also an indicator showing the overall liquidity situation in the broader market. Then, how do you interpret the current trend of Bitcoin for the S&P 500 and the movement of Ethereum for the Russell 2000?
Yes, I think the current trend is giving a very strong optimistic signal. Although it's somewhat counterfactual, this cryptocurrency market has experienced the largest liquidation and deleveraging event in history. The scale was much larger than during the FTX incident. However, Bitcoin only dropped by about 3% to 4%. This shows that Bitcoin, as a store of value, is showing considerable strength. If this happened in the gold market and gold prices only fell a few percent, people would see it as a strong sign of trust. This situation applies similarly to Ethereum E as well. Currently, Ethereum is seeing a surge in trading and activity centered around stablecoins on both L1 and L2, but this fundamental growth has not yet been reflected in the price. It takes time for this to be reflected. Therefore, I believe that this expansion of fundamental activity is highly likely to lead to a significant upward movement toward the end of the year.
Considering that gold prices have recently hit all-time highs very quickly, do you think funds are rotating from gold into some cryptocurrencies?
I'm not tracking the gold market very closely. Our chief technical strategist, Mark Newton, saw a cup and handle pattern on the gold price chart earlier this year, and he thought the target price was almost exactly where gold is peaking right now. So we believe that gold may have reached a justified peak at this point. This is a good sign for stocks or cryptocurrencies. Gold has been drawing attention away from stocks and cryptocurrencies. If gold prices cool, it could boost both the stock market and cryptocurrencies like Bitcoin and Ethereum. Thank you.
The start of a dream is important, so be a little ambitious and grow little by little every day. Enjoy today's journey. Even if a dark challenge comes, I'm not afraid. Retire with United States stocks.